my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. First, I'll start with the euro-dollar. A bearish dark cloud cover pattern yesterday, almost a bearish double pattern. Prices dropped down below the very recent 50% Fibonacci line at 119.75, down to touch the middle time at the 2021 bearish Andrews pitchfork, currently at 118.96, where they stopped and closed just over the time. This was also just over the seemingly lightweight, lesser Fibonacci congestion levels at 118.97 and 118.87. These two seemingly caused the large move up on Wednesday, so it's worth paying close attention to them. However, as you know, I suspected the rising proximity of the long moving average, currently at 118.58, had a significant hand in that. It'll be interesting now to see if the same repeats itself as prices try lower. Meanwhile, we still have target X in the 118.05 area. This is the target for the action over 2021 so far, being a sort of halfway hesitation. I've recently been minded to think that the market came so close to it last week that you might call it reached. However, that does not preclude further attempts to fully capture it. One final point. I have the beginnings of a suspicion that the action from the peak of late February until today may be a possible bear flag. Not sure yet. More on this as I see it develop, or not. So far today, initially steady over the middle time and the lesser Fibonacci levels, but now starting to test them again. Cable, aka sterling against the US dollar. A bearish dark cloud cover pattern yesterday. In a way, such a bearish pattern was unsurprising, as the top of the pattern was hung onto the clothesline resistance, that is, the supremely important middle time, currently 140.01, of the late June, late September 2020 bullish shift pitchfork. Now, this middle time, along with the lower time below, currently at 135.42, have given the bullish angle attack of this market since September last year. Below, we still also have the rising short medium moving average, currently at 138.01, and its partner, the start of November 2020 to date uptrend, currently at 137.82. None of this action helps nor hinders the idea that we have a small, very small, reverse head and shoulders pattern building up over March, with the neckline at 140 even. So far today, a small dip lower, a tiny follow-on if you like, but since then a pullback up, heading towards the neckline at 140 and looking like a bearish harami right now. Euro sterling. Another new low yesterday and also a new low close as well. One not seen since February 2021. It was also a bearish engulfing pattern, though the close was not too low enough to cause a major furore. All this is still about how the market approaches the two targets below. Target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, and target X1 in the 84.75 area, the target for the recent sideways triangle. We've been waiting for a while now, and patience has been wearing thin due to the lack of progress lower. Hence the new pattern idea I floated yesterday. We may be forming, since the end of February, a possible descending triangle pattern. Now, the upper trend line for the triangle is the late February to date downtrend, currently at 86.19, whilst the base is made up from the lows in the 85.5 area. Descending triangles can break either way, though they tend to ever so slightly be bullish in breakout. That being said, a break lower would place target X3 in the 84.5 area. An upside break would be based on where the break happened in the downtrend, which changes each day. I therefore haven't labelled a target yet, but if it happened today, then it would suggest a target in the 87.35 area. So far today, a move back down to the base of the descending triangle. Now, it all depends if and when closes can happen below the 85.5 area, and if we also have a false break or not. US dollar against the Indian rupee. A large combined key reversal up and bullish engulfing pattern yesterday. Not ultra surprising, as the previous two sessions were closely aligned, indecisive doji crosses after all. What was surprising was the size of the move up. The base was just above the late February lows, and the top was capped over the base of the recent descending triangle at the 50% Fibonacci line of the July 2019 to April 2020 move at 72.64. Right at the downtrend, currently at 72.62. Of the descending triangle itself, it seems some of there out there are not too happy about having to deal with this currently bearish pattern and are trying to convert it to a bullish one, or a false break at least. However, with the onward progress of the market, we now have a little over this downtrend declining partnership of the middle time, currently at 72.78, with the early November 2020 to late January 2021 bearish pitchfork, and the short medium moving average currently at 72.91. I haven't drawn a target for the descending triangle, but below we have a preliminary target in the 72.05 area, which lines up with the February 2020 high. A full optimal target would be for the target X1 area, which would be in the 71.20 area. So far today, a reversal back down below the 50% Fibonacci line and approaching the interesting September 2019 high at 72.41 and looking like a bearish harami right now. US dollar against the Brazilian real. A possible hammer action yesterday, usually seen as a bullish reversal. The market dropped down through last week's lows at the interesting lesser 38.2% Fibonacci line at 52.90. Now this lesser Fibonacci line is interesting because it provided the flat trend line necessary for the recent bullish ascending triangle. What is more, prices also dropped down through the mid-January to date uptrend, currently at 549.71. This was the lower trend line for the very same bullish ascending triangle. However, and it is a big however, the market reverted back up as it approached the rising short medium moving average, currently at 545.97, and the recent 50% Fibonacci line at 544.41. Obviously not too keen on testing these stronger supports yesterday. This action reverting back up has now created a hammer action, as I've mentioned earlier, for yesterday. Generally these are seen both traditionally and in the data as bullish. Now it will be interesting to see if there is a follow through higher today. Finally, a point I made yesterday and worth repeating, despite its contrariness to the previous statements. The action from last week now is suspiciously starting to look like a bear flag pattern. Just keep an eye open for that. US dollar against the Mexican Peso. An immediate countering bullish thrusting pattern yesterday in response to the previous session's key reversal down. The action was based, unsurprisingly, maybe even generated by the combination of the rising short medium moving average, currently 20.29.31, and the mid-January to date uptrend, currently 20.32.10. Also unsurprisingly, the cap on the market was the previously highlighted support, now resistance, of the combined lesser Fibonacci level at 20.60.62, and more importantly, the very recent 50% Fibonacci line at 20.58.49. Therefore, one could view this reactionary bullish action as a limited one, or even less perhaps. So far today, another reactionary move, this time lower, testing both the uptrend and the short medium moving average right now. Further below, we have the gently declining medium moving average, currently at 20.21.13. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.